Okay, let's take a moment and look at the disclaimer. For entertainment purposes only, nothing, nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here just to tell you how BTA analyze the markets, how we look at the markets. This is Rod from BTA, and we are known as the middle traders. We will not get in at the exact bottom, and we will not get out at the exact top, but we will make a lot of money in the middle. We are the stock market masters. Okay. What I want to do today in this video, the media did not tell you that happened yesterday. What they did not tell you, I looked at the news all day yesterday, read tons of articles, and nowhere did I hear any of these commentators tell you what I'm about to tell you now. Okay. You all know that I've been calling for weeks now. I've been calling for a rally. We got our weekly Bollinger Band stochastic MACD strategy that we're looking to trade off of next week. It's finished the setup phase. It looks like it's going to have a strong finish this week and finish the signal phase. So next week we'll be looking for the pivot. So I'm not all bearish on the market, but I do believe we're having a relief rally right now. And we're going to run back to the top, and then it's probably going to collapse, and we'll get the real bear market will begin. This is just the beginning. This is just a small correction that we're looking at. I'm looking for a major collapse after we run back to almost new highs. At least we're going to get back to the high, all right, the high on the day of the yield curve inversion. So, but what they didn't tell you is very important. We're going to have a problem soon. All right. I'm talking about the GDP. The GDP came out this week. Now, what is the GDP? Really quickly, and we're going to make this simple. I'm going to give you a very simple explanation of this. The GDP measures the value of all the final goods and services brought by final users in the country, produced in the country over a given period of time. So it's all the output generated within the country. So I like to make it very simple is the value of everything in the country, basically. What is it worth? Simple. Just think of it like that, and you don't have to kill yourself with a whole lot of Wall Street terminologies. Okay. Why is that important? Because two consecutive quarters back to back, two consecutive quarters of negative GDP growth, which means, well, I just said, make it simple, y'all. The value of the everything that the country produces. Let's just think of it like that. If that growth turns negative for two consecutive quarters, all right, it's the technical definition of a recession. But the Bureau of Economic Research said they do not necessarily need to see that to call a recession. They do not necessarily need to see that to call a recession. But two consecutive quarters of negative GDP is technically a recession. Oh, well, why do I say that? Well, guess what? They mentioned, well, what we want to do here, they mentioned that the gross domestic product, the GDP, it did decrease. Okay, it did decrease It went negative by 1.4% in the first quarter. So that's known. Everybody is aware of that, right? That GDP went negative in the first quarter. All right, negative 1.4%. Now, but that was just the first estimate. They call that the advanced estimate. The advanced estimate. That's what they call it. All right. We get 3 estimates of GDP. Let's bring this over here. Let me just show you this. Here is the website. Okay. I'm going to bring this down so you can see it. Okay. This is the website of the schedule of the GDP releases. All right. It's the official government website. You can see right up here at the top. Official government website. Okay. Now, an official website of the United States government. So down here is all the different economic reports that they release. But what we want to get to is where it says gross domestic product. Well, you see here we got the gross domestic product for the fourth quarter 2021. Well, what we're looking at here is the gross domestic product for the first quarter in 2022, right? You see it says advanced estimate. It's 3 different estimates. One is the advanced estimate. And then shortly after that, they give you another estimate, which is the gross domestic product, the second estimate. They look at it a little closer to see if anything has changed. Okay. And then you'll get the third and final estimate. If you come down a little further, you're going to see GDP right here. GDP. GDP. Gross domestic product. I'm sorry. Gross domestic product. The third. The third. Okay. That is what we're going to see. The final. The third and final. So you get 3. You get the first advanced estimate, then you get a revision, which is considered the second estimate, and then you're going to get that third and final, which is going to be the final. They look at it very closely at that point. They have more time to look at more data, and they come with a final estimate. So we know they reported that the first advanced estimate back on April the 28th was negative. GDP went down. It went negative 1.4%. Okay. It decreased. You see it saying it right here. It decreased. So it decreased by 1.4%. This is for the first quarter. Now, we had the revised estimate. The revised estimate. Remember, we just looked at the website and it told us that we're going to get the second estimate, okay, on May the 26th. Well, we got that. Today is the 27th, right? We got that yesterday. But guess what? Remember, the second estimate is where they look at things a lot closer, a lot more data, give you a more accurate estimate of what's going on. Well, guess what? We got that second estimate. And look what it did. It said, hey, we didn't go negative 1.4. After we looked at it closely, for the second estimate, it decreased by 1.5%. So the value of everything in the country, everything we produce is going down. It's getting worse. The economy is slowing. It's getting worse. It's 1.5. Why didn't they say that? Well, they don't want to scare the HELL out of everybody, okay, and cause the market to fall apart. No, but this is not good. If that thing would have came in and it said instead of negative 1.4, we was only negative 0.5, 0.05 or something like that. Oh, forget about it. 0.50, they would all forget about it. It'd have been all over the news. It'd have been a happy moment. The music would have started playing. Everybody been dancing up a storm. But nah, this is bad news. They don't want to tell you that. This could be showing that maybe the country is slowing. We got inflation. Okay. Problems. Problems. So we got to be on the lookout because May the 26th, yesterday, was the second estimate. All right. We're going to get that third estimate around June the 20th. Well, not around, on June the 29th. That third and final estimate of GDP is going to come out on June the 29th. Okay? If that also comes in negative, we got to look out. Because right after June the 29th, on July the 28th, we're going to get the gross domestic product for the second quarter, the first estimate, the advanced estimate. If that also comes in negative, that's your 2 consecutive quarters of negative GDP. That's technically a recession. And you know, if the market feel like we're going into a recession, that could be problems, as my mentor would say, not problems, problems. You got some big issues. Dating y'all very closely. I'm gonna be watching this very closely. I got my eye. My good eye. All right. My good one. All right. On the next revision that's going to be coming out for the first quarter GDP. Okay, I got my good eye on the next one that's coming out. So we got the May the 26th. We got the next estimate, which is going to be the third and final one on June the 29th. I got my good eye on it. All right. So we're going to be looking out for that. Now, so the country is slowing, could be a problem. Now, this price, the U.S. price index, the gross domestic product price index measures the changes paid for goods and services produced in the country. The goods and services produced in the country. The changes, okay, in the prices. Well, what happened? When it came out, they forecast 8%. It came out 8.1%. Prices are going up. Problems, inflation. Okay? The core durable goods orders, month over month. Well, core durable good orders measures the changes in the total value of new orders of lasting manufacturing goods. So goods that they manufacture that can last. The orders for those things. We see with the GDP numbers, things are slowing. We see the price of the things are going up. You just looked at the price index. And now you're looking at orders for durable goods, things that can last. Long-lasting manufactured goods. Are they ordering it? Well, it went down. It was previously 1.16. Now we got 0.3. They forecast 0.6. It came in at 0.3. The orders are going down. People are not ordering a lot of manufactured long-lasting goods. Okay? So orders are going down. We got the country slowing. Okay? We got orders going down. They're not ordering a lot of things. Did that sound good? Okay? So that sounds good. New home sales month over month. This measures this data here is of the new home sales. Okay? A new home sale is considered to be a deposit or contract signing either in the year of the house was built or the year after it was built. Stop all the fancy talk. New home sales, month over month, negative 16%. Negative 16%. Previously, it was negative 10, now it's negative 16. People may not be trying to buy new homes right now with interest rates going up and the prices of houses skyrocketing. Problems, y'all. Look at all the problems, okay? New home sales, okay, for the month, okay, from the previous month, rather. I'm sorry. New home sales for the previous month. They forecast that we will get 750,000 homes sold last month. But guess what? It came in with only 591,000 homes sold. Okay? So look at that. Month over month, it's going down. When you compare one month to the previous month, it's going down. When you 750,000, they only got 591. It's less houses. People are not trying to buy homes. Right now, maybe because interest rates is too high, inflation is kicking them in the behind. We're starting to see some job losses coming in too, trickling. You hear talks all over Wall Street, major companies saying they stopping hiring. But we know we start seeing that job losses, the recession is for real. Okay. Now, pending new home sales, negative 3.9. Negative. So, why did I say I call this video what the news media didn't tell you yesterday? Well, they didn't tell you that the GDP was negative 1.4% in the first quarter, the advanced estimate. And then when they looked at it even closer, now it's -5 for the second estimate. What the third estimate gonna say? If the third estimate says -1.5 or even worse, and then we get the first estimate, the advanced estimate for the second quarter comes in negative also, well, guess what? Technically, you got your recession. They not telling you this right now. So yeah, we've been calling for a rally. Yes, you know that. But I've been telling you that this just may be a relief rally, a run up back to the highs of the inverted yield curve. And when you get there, it's good night, Irene. All over. Okay. The collapse is on. Job loss is probably going to be showing up at that time. Everybody going to probably say, oh, we're definitely in a recession. And then, whoop, the bubble pops and the market drops. All right. See y'all on the next video.